Hi, welcome to my channel, and today we shall discuss a little accounting basics focusing on what is an asset. So if you go onto the internet, we can see that assets by definition are things that give a company probable future benefit. And typically assets can be divided into two, which are short-term assets and also long-term assets. Short-term assets can be converted into cash within a year, while long-term asset will take more than 1 year to be converted into cash. So moving on, examples of assets could be as follows. Number one, it could be cash. Why cash? You can actually use cash to buy inventory, and from that inventory, you may sell that as a profit, and that will give you a benefit in the future. The same as inventory, whereby you can sell this inventory for a higher price and get a profit. And just for fun, I put a picture of a gold mine. Why gold mines? Works the same, where the more you harvest gold from the mine, you can sell it for a little profit. And finally, just for fun, since we are in a digital economy, even apps can be considered as an asset. Remember, assets are things or items that will give you a future benefit. And apps to app developers will enable future income. So to highlight where the asset lies in the equation, asset equals to liability plus equity. To break it down, assets are either financed via a liability or equity. So liabilities are loans that the business takes from outsiders, while shareholder equities are an injection from its owner so as to buy an asset. So over here we can see that assets are what items which has been bought by the company, while who funds them could be either a bank or the ultimate owners. An example of this would be, say, buying a car via a loan, where you can see the assets increase since the car will give the company a probable benefit, while the loan indicates that money has been borrowed to buy the car, so you can see an increase in liability. The second example would be buying a PC using the owner's money, whereby you can see an increase in asset as the company acquires a new PC, while since you use your own money and you are the owner of the company, you shall see shareholders' equity also increasing. Quick note over here, the equation must always balance. So if assets increase, one of these also has to increase, while if assets decrease, one of these also has to decrease. Okay, with that, we shall conclude our little discussion on assets.